Alright everyone, this is Vishal from Uncharted FX, and what a week so far. I wanted to talk a bit about gold and what we're seeing in the precious metal markets, but first of all, let's look at some other, economic news, but this all plays in why gold maybe, or precious metals in general, are in a bull market in my opinion. So this is actually the second article. This is the one I wanted to go to first, and this is Fed Williams. So he's the New York Fed chair. John Williams basically came out on Thursday talking about how the Fed must act quickly to lower rates during economic distress, and also how rates should be kept low for a prolonged period of time. And I just want to show you how the market took it when he came out with those comments. We were selling off, and look what happened here. We had a big sell-off here. So, the sellers were stepping in, and then all of a sudden those comments came up and we went up higher. I think we probably could have even closed higher if it wasn't for what happened in Iran and the Strait of Hormuz. But I think, we're holding this lower high here on the longer term. And you can see here the market still sold off. Why could that be? He clarifies saying that I'm not giving any policy actions, or these comments are not about potential policy actions. So essentially, when the market heard Fed Williams talk about this, the market was expecting much more rate cuts. I believe that the market has already priced in a 25 basis rate cut, but I think the market wants more. If you follow my work, you understand, or you understand like my whole theory or my idea on why I believe that the central banks around the world, their mandate is now to keep assets propped up. They want to cut rates. It's just about maintaining the narrative and doing it in a way where they can maintain the confidence. So, they're probably looking for something geopolitical, in my opinion, something where the Fed can say, hey, look, everything was going fine and we had to cut rates because of this. But the market took the Fed Williams statements as, more cuts. And then they came back to backtrack that. And this is probably why we saw the sell-off. The market just wants cheap money because as long as rates stay low, there's going to be nowhere else to go for yield except stocks. And I believe this is why next week you'll probably hear him clarify these statements again, or you'll hear more about how a rate cut looks certain. Again, I believe 25 basis points is already priced in, but I think the market wants 50, and the Fed may have to deliver 50, because if the Fed cuts only 25 at the end of this month, the markets can very well sell off, because they were expecting higher than that. And as I said, the 25 basis point cut is already priced in. Another thing I want to talk about is Ray Dalio's paradigm shift article. He authored this on LinkedIn, and this is actually taking the gold community by storm. So the thing about Ray Dalio, I believe it was last year, he believes that we are in the seventh inning. So in the baseball term, right? So seventh inning of a potential debt crisis. And he speaks about paradigm shifts. So essentially when people paradigm shift, so they believe, for example, keep going into this and these moves get extended. So he talks about stocks and bonds, how he believes stocks and bonds are going to get extended. And then there's going to be some sort of paradigm shift where stocks and bonds will fall. However, he says in his article that the governments or central banks will not allow bonds to drop, because they have to keep interest rates low. So this will be, they'll probably have to print money to buy these stocks up. So we're going to be basically mimicking Japan and the European Union, or the ECB, sorry. And essentially he talks about how in these 10 years, there's generally some sort of event or paradigm shift, and he goes through these decades from 1920 to the present. And if you remember from his last engagement, when he talked about the seventh inning, he likened us to 1930s going into the 40s. So very good read. Again, there's a lot to go through. However, he also talks about how, central banks are running out of options. They can still do QE, but they only have a limit left. It's not sustainable. So there is going to be some sort of paradigm shift. I call it a confidence crisis that is coming up. And this is why I believe gold and precious metals are doing well and have already priced in this confidence crisis. He talks about or are pricing in a confidence crisis. I still believe it can go much, much higher. He also talks about the big social payments and pensions, all that kind of stuff that are just going to go higher. Government's going to have to tax more in order to pay for all this, and there's going to be a big split between the capitalists versus the socialists. You're going to see the socialist movement rise, and again, you're already seeing that with largely the Democratic Party, and these gaps are just going to widen, and you're going to see things get worse. He talks about how bonds and cash are considered in such a world. Storing one's money in cash and bonds will no longer be safe. The article here talks about how he says sell stocks, buy gold, sell stocks. He doesn't really word it like that. He just say gold. He doesn't really say sell stocks, but there's going to be I've been speaking about this on my blog as well and my social media. There's going to be nowhere to go. It's going to make no sense holding bonds when they're yielding so low. So it's not going to be a place to go, really. And when it doesn't make any sense anymore, there's going to be that large sell-off, which is going to come unless, as Dalio believes, the central bank, the Fed, will go about buying debt and kill the debt market, just like the Bank of Japan and the European Central Bank have done in Japan and Europe. But again, that would be a bit more it would be a bit more of a shock, I believe, to the world, because a lot of the world runs into US Treasuries. And would the dollar still be considered a safe haven if the Fed is there just saying, don't worry, we're just going to buy up all this excess debt, US bonds? So things to think about. And here we go. He says, in other words, I suspect the new paradigm will be characterized by large debt monetizations that will be most similar to those that occurred in the 1940s war years. So what does he say, which has had a lot of people speaking about this article? For this reason, I believe that it would be both risk reducing and return enhancing to consider adding gold to one's portfolio. I will soon send out an explanation of why I believe that gold is an effective portfolio diversifier. So Paul Tudor Jones has also come out saying he believes gold is going to be the best trade of the 2020s, and essentially Ray Dalio is saying the same. Ray Dalio has always been, I think he's like the 6th largest holder of GLD contracts, so he's always pretty much been in gold, but he's always, recommended a 10% portfolio allocation. However, now he is recommending a bit more than 10%. And I believe this article, the Ray Dalio article, is what has sort of caused, or what will cause, probably a bigger move in gold and silver. You got to realize a lot of these Wall Street guys, when they hear from Dalio, who's very well respected, a very smart guy, used to run the largest hedge fund in the world, right? Bridgewater Associates. He stepped down as the CEO, but he used to run that, and his words are nuggets of wisdom, and people will follow his word. And I believe, when that article came out, I believe a lot of institutions started to buy gold and silver mining stocks, mostly the royalty and streamers. And if you look at some of their charts, they've done quite well just in this past week. So let's look at gold and silver and what we are expecting. So again, I talked about this big break here. I think a lot of YouTube channels, traders have talked about this. What are we looking for? We're looking for this next flip zone that is here in the 15, but I would even say up to 1600 here. So this is a zone that we are expecting to first hit. And again, if you look at the chart of gold against other currencies, gold is already making new highs. I believe it's just not against the euro yet and the US dollar. So the gold is doing well against the Aussie dollar, Canadian dollar, the yen, etc. So this is what I'm watching. We have, we had this break. Generally, like you said, the way support works is people expect that zone to get retested before we take off. So that is a possibility. However, I like this break a lot, so I am betting a lot of the dips will be bought. So I think the lows are here at 1350-ish, let's call it 1340 to 50 zone. We did make this higher low here. And there was this big sell-off today in gold, which, again, it's nothing to, I think, panic about yet. We can very easily see a retest back down to those zones. However, we are still holding this now. It's resistance now turns support, so that's what we're holding now. So it'll be interesting. Let's see what happens. Before I look at silver, I just want to talk about all these other factors. So of course, there's the Fed that is going to cut rates. So we know as they cut rates, real rates go closer to zero and negative, and you might as well already hold gold in that kind of case, because real rates are going to be negative. So gold is seen as an inflation hedge too, right? That's what people traditionally call it. Again, I like to look at it more as a confidence crisis. When people run out of confidence in the government, the central banks, and the fiat currencies, they'll run into gold. I'll probably do a video one day about the cycles of human history. We've always gone through classical economics, which is about hard money and low taxes, and mercantile economics, which we now call Keynesianism or Keynesian economics, which is about soft money, which can be devalued, and also a bit higher taxes, so more government involvement pretty much. So there's that as well, but I also want to talk about the whole geopolitical case, with Iran, let's say, and also, you can even say with China too. Today, I believe a drone was shot down, and the Americans said they shot down an Iranian drone. The Iranians are saying it wasn't ours. The Americans shot down their own drone. But if you follow my work, I believe you're going to see things happen in Iran or in the Middle East, just because Iran is a key player for the Russians and the Chinese, who I believe are trying to hit US dollar demand. And Iran right now is a good candidate just because Iran sells oil for any other currencies except the US dollar. So if the US dollar keeps going higher, more countries will decide to buy, or it looks, Iranian oil looks a bit more better because they don't have to use the US dollar. They can bypass it and just buy Iranian oil rather than buying other oil priced in US dollars. So I believe something's going to be happening to Iran eventually. There's a lot of talk about them going past their nuclear capabilities and all that kind of stuff, or enriching more uranium than they were supposed to. So there's all of this geopolitical stuff that helps gold as well. And let's not forget about the US-China trade deal. Things look good at the G20 meeting. However, as I have been adamant about, China can remain patient. They don't have any elections. They don't need to worry about re-election. They can wait for a weaker US president. President Trump has to make sure stocks and stuff are doing well, because I believe he will win the next election as long as stocks and the US economy is doing well. Generally, when the incumbent loses, it's always due to economics. That's the end of it. If the Democrats, they could have won the election if the economy was as strong as Obama and Hillary Clinton said it was, then the Democrats would have won the election. It wouldn't have been Trump. It's all about economics. So as long as the markets are up, and again, Trump will probably be using that platform or running, using the platform of keeping America great. So he'll want stocks to be high. Of course, this is also why he wants lower interest rates, because he knows very well that there's going to be nowhere else to go for yield except the stock markets. So again, a lot of other geopolitical things that are very beneficial for gold, not just the economics, the macros, but I'm more into gold for the macros because I believe there is a confidence crisis. But here, let's look at silver, which is gold's little brother, I guess. So we were speaking about this on the blog and a couple of my videos where we had our first higher low. We were expecting our second one, and of course we had that. And look at this move. This was the trade that I personally took, and I closed my position. And you can see here we even broke above this flip zone here, which is now going to be resistance now turns support. So let's see how price reacts here. There's articles on Zero Hedge about a large whale buying silver contracts. A lot of people think it's the Chinese because they're also stacking gold, and perhaps we're getting close to some sort of usage of gold or hard money pretty much in the next reset. I've talked about this a lot through my social media and through my blogs, why I believe China and Russia will be using gold. It's a way to bypass the dollar, and I believe that they're going to try to spike the US dollar or try to make the dollar rise, even though the yuan and the ruble will decline. They hold a lot of gold, so their currency might decline against the US dollar, but gold compared to their currency rises, and that's how Russia has basically maintained their stability even when the ruble was getting destroyed by sanctions and stuff. Their gold positions against the ruble was appreciating, which meant they were still doing fine. And again, as long as the dollar goes higher, it drives more nations towards the east, looking to this sphere, because they'd rather buy Iranian oil or even Venezuelan oil. And that's what the Russians and Chinese are trying to do, in my opinion, try to hit US dollar demand. So again, silver, very nice chart. You know me, I'm a big silver guy. So what are we looking at next? Again, a very extended move, so we should expect some sort of pullback perhaps. But again, that's only when we see it. We take it candle by candle. Another level here that I'm looking at is another flip zone, and of course it is around the 1730 zone. I think a lot of people are watching this area, but a very nice move here on silver. It's going to be a bit messy, but here on the weekly chart, a lot of people are already speaking about this, how technically, if you draw a trend line here, we've had this big breakout now on the weekly of a wedge, I guess you can call it, or a wedge. So a very big break here, and this is very bullish. So could we see a return back to 15 before we go higher? Again, I'm a trend guy. I'm gonna have a course that's coming out soon, and you'll see how I trade. I look for swings and waves in markets, and something like this. Yes, it is a nice uptrend. However, we have already two waves. Of course, waves can continue, so I am expecting maybe some sort of pullback before we make another higher low, and that's what I was expecting here too. We did make our first higher low here, and now let's see how gold will react. So again, I want to leave you with this, or with these charts of gold and silver. Is that bull market back? Are we in a precious metal bull market? Again, I think long term, I'm very big on gold and silver, and I just think what's happening in the economic landscape with what we're going to be seeing with central banks running out of options, and as they start cutting rates, they're going to go back to QE, which, remember, was supposed to be a one-time thing only. But I think more people will eventually realize that this QE thing now is the norm. These central banks had no plans to get rid of or sell off their balance sheets. They're just going to increase it. And I think as that continues and people realize that central banks are stuck, that's when the confidence crisis becomes a bit more apparent. The central banks will just be printing money, and do you trust the government and the banks to print money? If not, then you'll probably want to run into gold and precious metals, and I think that's going to be very positive for these precious metals going forward. Of course, if you follow my work and my blog, I'm a big supporter of precious metals, and I think they're one of the best investments right now for the medium to long term, given what's going on with economics and geopolitics. So that's it from me. If you did like the video, please give it a like. It really helps. And if you aren't following me, please give me a follow. All right.